Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Wednesday, August 6, 2014. We're going to take a look at the markets like we usually do. We've got 2 days of action to take a look at. We'll look at the indicators, and then we're going to walk through the BRIC countries, and I'm going to also take a look at the DAX, which now looks like it's done a 10% correction. And then we'll take a look at 3 Chinese stocks. Okay, so the Dow was up 13.8 points today, so a little bitty pause in here. This was Monday. In my post on Monday, I said we got a small bounce. That's exactly what we did, and then we continued down yesterday. And today, a little bit of sideways action and hardly doing anything at all. The NASDAQ was actually up, so we really had a mixed market. Well, I mean, this was up, and but not much of anything to look at. Kind of a pause day, sideways, inside day, doji type day. Now here's the thing I'm noting. Now, a couple things. All right, we're getting a little bit of divergence in here, but I don't like the way this RSI looks. It's doing a little bit of that fish hook again, which, you know, a lot of times we get the fish hook, you get another little move down, and it could be just a little move down, but it may mean we got one more little down day. I don't know. It's hard to tell. In here, and you notice like back in here, you were oversold, you're getting a little bit of divergence, and then we got, you know, one more day down, 1 or 2 days down back in here. So we could be getting close to a bounce. It's we just have to keep our eye on it and watch and see. The other thing I want to point out is that we are outside the Keltner channels. Okay, the dotted lines are what we call the Keltner channels. And so for those of you who don't know what the Keltner channels are, the Keltner channels are 21, based on a 21 day moving average. It's an exponential moving average of the close. And then what you do is you take plus and minus a 10-day ATR measurement times 2. And so that creates a band around the pricing. And when you get above that band, you're starting to get an extreme. We get below the band, you start to get an extreme. And it isn't quite as volatile as Bollinger Bands. The Bollinger Bands, you know, tighten in and tighten out. And I could never get comfortable with Bollinger Bands. I used them before. I've tried to use them. And I just like the Keltner channels better. So the point is, we are outside the Keltner channels to the downside here. And now we got a doji bar. Okay, so back at the end and back here in February, we're outside the Keltner channels, and we got a doji bar. And next thing you know, that was it. And in October, we were outside the Keltner channels with a doji bar that looks very similar to what we have today. And in August, a couple of bars that were similar. I'm not sure if I'd call that a doji. This might be in here when you're outside the Keltner channels. Now, granted, we had one back here, and we kept moving and bouncing. So there's no guarantee, but a lot of times sometimes it'll tell you it's a pause. So now you just have to, watch and pay attention, see what's going on. Same thing here with the S&P 500, the SPX. Now we're right at the Keltner channels, I believe. In here, let me blow that up a little bit. Yeah, we're right on the Keltner channel in here. And we're getting, a little bit of divergence, more of a divergence type thing that's showing up in here on the RSI. 10-day RSI is what I'm using. All right, now I do think if we come down more, everybody's talking about 1900 and 19 whatever. Here's why I've had a dotted line in there at 1900. I put this in over the weekend, and that's because, previous high and previous high closing bars up in here it may create some support right around here at 1900. Now, it may not. It may come down into this congestion, and it may go all the way down to test the 233 day, which is what I've got on the chart. The NASDAQ today up 2.21, and it's not, again, it's not selling off nearly to the degree. I mean, it's barely outside of this congestion, and it's hanging right here at the 55 day. Notice how it closed right on the 55, I believe. The 55 close 43.54.62, and we closed 43.55. So I mean, it's like right there. Take a look at the indicator real quick. It's not oversold. Naturally, it doesn't look like it. It doesn't look like it is. The RSI is not below 30. When I say oversold, that's what I mean by that. And again, just because something does get oversold or overbought doesn't mean it's not going to continue. Like up here, when it got above 70, it continued to push and push. Okay, Russell 2000. Russell 2000, again, what were we up 3.98 today? So this looks like a little bit of a flag type congestion in here, and we're right at this major trend line right here. And we're getting a little bit of divergence in here. This is probably pretty close to saying divergence. I'm not sure if this is exactly, 25.59 or 28.59. Well, yeah, it went slightly lower, fractionally lower, but it's pretty close. Visually, it looks pretty close, especially when you see that you went down further. So there's a good chance we could be getting a turn building. We're not seeing the divergence here on the DI minus though. I like to see it in more than one indicator, but sometimes the RSI is enough. And here is the New York composite. It is slightly broke through the trend line from 2011 today, but closed right at it. So we'll see. The short-term trading index is pulling back up on the 10-day. It's back up in here at, where's the 10-day reading? 1.08. So it's eased off of hit going for the extreme. The VIX backed off a little bit today. It had gone higher during intraday, backed off. So we're not getting this big divergence play in here. We're seeing it, like I mentioned before, up here on DI plus. But not getting it on the RSI like we got before. Okay, so we may not be done yet for this little move. We'll see. The high-low indicator is continued to be where new 52-week lows are exceeding new 52-week highs. And so this has been, what, 1, 2, 3, 4, 5 days of that, first time since this cluster back here at the end of January. Okay, now I'm going to go ahead, well, let's see, let's take a look at, well, we just walked through the indicators, and now let's go ahead and look at the BRIC countries, Brazil, Russia. Okay, so where's Brazil? Brazil 50, here we go. Okay, so in the last week, what was a week ago? A week ago was July 30th. So right here, so Brazil is slightly down. It came down, it's bounced back last couple of days, but it's slightly down. Still got this solid uptrend on the 21-day moving average. You got to say the trend is still up here. We're not getting divergence on this move when you look at here and here. So Brazil is still tracking. Now Russia, on the other hand, surprise, surprise, is going in the tank. And that's because all this sanction talk and, Putin building 20,000 troops on the Ukraine border again. And I just don't think, I don't know. It's going to be interesting to see how that whole thing ends, but it sure doesn't seem to be going away. And I got a feeling Putin's not going to be the kind of guy that takes being threatened easily, but I don't know what the alternatives are. There's brighter minds than mine are supposed to be figuring that out. Okay, this is looking pretty solid in terms of a downtrend back in here. I don't know. It could easily go back down and retest the lows. So this is heading down as a result of the damage and things that are going on. And then Germany at the same time. I'm going to go ahead and hit Germany since we're talking about Europe. Germany has sold off from this high up here on June 10th, and literally, so in two months, basically 8 weeks, it's done a 10% correction. So it's actually close to close, it's 9.5%, and intraday, it's definitely 10% in terms of the pullback. The other point to note is look at the degree here that it's below the 233-day moving average. Okay, it hadn't been below the 233-day moving average since all the way back in 2012. June of 2012 was the last time it had been below the 233, and then it just sliced right down through it like it wasn't even there. Okay, so that's a pretty dramatic move on Germany's part, and again, pretty quick. India's starting to chop sideways a little bit, but I'm not sure that my bullish scenario is off. I mean, I think we had this flat type of minute wave 2 is what I would call this. Actually, subminuet wave 2, and so we could be in this little third wave that we're still working. It's just that it's not pushing a whole lot higher here. Over the last week, where's the 30th right here? So we're down slightly over the last week. But the trend, the moving averages are still aligned. The trend still seems solid. Let me see, the next one, I always forget, it's got to be China. Okay, Shanghai Composite. Okay, so the Shanghai Composite, we've talked about this. Where's the 30th? Last week was here. So nice move coming up, and then we had this sell-off intraday today, and then it comes right back. So it's a pretty solid, pretty strong move coming out of this compressed triangle here, and I've got this dotted line as the projection from this the green triangle projection up as to where it's going to go. And I noticed that, you know, there's some publicity. Somebody, Tom DeMark, was talking about, you know, 10% correction in China. I'm thinking, okay, why are we talking about a 10% correction in China now when it's been trending down since, you know, 2010? And actually before that, but I mean, post, you know, the 2009 rally, I mean, we've been trending down since here. You know, if anything, I think we're bottoming. You get a symmetrical triangle like this at the end of a move like this, this could be a reversal symmetrical triangle in here. Now, sure, we can get a little bit of a pullback, you know, like a retracement in here, but that's right now, I mean, this is acting pretty strong. Nice little gap in here on the move. So we'll just have to keep watching this thing and see where it goes. Okay, and the last one that we wanted to talk about is South Africa, I believe. And it is starting to chop sideways in here, some type of sideways correction. And the 30th was right here. So again, we're down some over the last week. You know, all the markets in the world start to get infected, you know, by, you know, the New York Stock Exchange and the markets here in the United States, and everything starts to ripple around the world. So it's not surprising to see this down. You get the 10 breaking below the 21, and then look how solid and you know, this is kind of like the U.S. market. You know, it's staying above that 233-day moving average. Okay. That's it for the markets. Now let's take a quick look at SFUN, Melco Crown, and KNDI Technologies. All right, so SFUN, okay, I've talked about this in a video, in an individual stock video that I'm creating. And by the way, in case you aren't aware of that, I do have a web page on the website that's dedicated to stock market technical analysis, and I'm doing individual stock reviews, and these are of the stocks that I follow. Okay, I've got about 33 US stocks and about 14, 15, something like that, Chinese stocks, and so I'm trying to get through the highest volume of those. Okay, and surprisingly, of the 14 that I'm kind of monitoring on the Chinese side, SFUN is the highest, got the highest 50-day moving average. And I'm not counting NQ because NQ it looks like it's in a takeover situation. So I just kind of took that off, but it was averaging the highest volume. But SFUN is averaging 8.2 million shares over the last 50 trading days. So the volume's heavy, although the stock is down around $10. So with SFUN, I've talked about this in the big video. I won't reiterate everything due. I think we've got a major impulsive cycle wave 1 that's completed, and now we're correcting that entire cycle wave. And a lot of times after you have 5 major waves up in a cycle wave, you're going to get a pretty complex type correction. And I think we have a combo correction going on. I think we had a flat in here with an ABC X wave connecting another correction of a zigzag here, ABC. I do think we've corrected down enough, so I'm looking that this is the end of the correction. I am looking and watching for that we're going to move higher. Now this little ABC type move in here bothers me a little bit. I like that we've broken out of this trend line, okay? So now the scenario I'm going to have until it changes is that this is minor wave 1, minor wave 2, and then in minor wave 3, this is minute wave 1 and minute wave 2. So you have a 1, 2, 1, 2 as you're trying to work your way up, okay? And so now if this comes down and goes below here, then that scenario is off. It breaks this trend line and it goes below this point here, then we've got some complex corrective action that's still continuing on. All right, that's my best assessment on SFUN. And okay, Melco. Okay, Melco broke down pretty big today. And it actually, I was thinking this was the end of the crack. I was thinking we were getting an ABC flat correction and that we were bottoming in here. But with this breaking down below that, then this could not be the bottom because this has gone lower. So now I think something more complex also is going on, similar to SFUN in that we've had an impulse wave up and 5 major waves that we now have to correct. And I think we clearly had a 3-wave A, a 3-wave B up in here in a flat type thing. And so I think we had a C down forming a W. Now I'm thinking we get A, B, C, X connecting wave. Now we've got some other kind of complex ABC. It may be a zigzag that's forming over here, but the bottom line is we're not in bullish mode, we're in bearish mode, okay? This is continuing to the downside. The moving averages, let me get rid of this. I know the crosshairs, I like using the crosshairs, but it probably drives some people crazy. All right, so this black line here is the 55-day. It is now below the 233, okay? So that tells me the long term is breaking down. The medium term, the 21 just broke below the 55. So now the intermediate is breaking down. Short term, the 10 is below the 21. So in my book, I've got the short term as negative. So this is breaking down. And so now we're just looking to see, can we figure out what kind of wave structure and how further down it's going to go. Right now, I don't have a prediction on that. We're just going to have to watch. I mean, you can do a measurement and estimate out, but I don't think it's going to do us a whole lot of good right now. And the last one we'll take a look at is KNDI, which we got in. Where is it? KNDI Technologies. Got in yesterday morning at 1810. Okay, was the entry. And so we're in here. My only, because everything is aligned. We've got this close back above the 10. It looks like we want to go. We've got, everything's lined bullishly. This looks like it wants to continue up. My only concern is, does this turn into a double top? So that's why I'm a little wary. I'm just watching this, okay? We're getting good volume. We're above the 50-day moving average on these volumes. A huge volume on this move up in here as we approach that previous high here. I'm not seeing any negative divergences that's occurring. And DI plus is above DI minus. We've got an ADX reading. Let me look at it. That's that light green line. And now I like to get my crosshair back. So it's right up in here. I'm looking over at my little window I've got in another screen. And the ADX is 32. Okay, so a nice strong upward trend is still in place in here, as you can see with the moving averages. So that's why we're going with the trend, until it ends. So we're staying with the trend until it ends. But in the back of my mind, I'm watching this, and I've got to stop. That I've got on the webpage that says, okay, here's where we're wrong. Here's where I'm wrong, and I'm out. Okay, so on the trade idea. So, okay, that's it for tonight. This has been Joe for Beyond the Chart. If you felt the video was helpful and you liked the video, Please share the video on social media, and click on the little red box here. If you're not a subscriber, easy to subscribe. Download the PDF and just first name and email, and you're good to go. So anyway, this has been Joe for Beyond the Chart, and we'll talk to you again Saturday, probably Saturday morning.